Bloomberg News.
Jim Rogers joins me today. He's in our Singapore studio, author of many books. The latest one is A Gift to My Children. And Jim, a very good morning to you.
Paul, here it is. Here it is.
There it is. Hey, tell you what, Jim, we'll talk about that book in just a little moment, because I know that you've taken some of your early ideas, some of your long-standing investment strategy, and you put them into this book with a paternal twist, because you're now the father of two girls. But let me get some emails first of all, because they're starting to fly in already. Let me talk a little bit about policy to start with, because David from Thailand, suitably enough in this case, but has a different issue. He says, what are your thoughts on the theory that the tsunami of government borrowing, spending and money creation will not lead to high inflation down the road because of it being largely offset by the huge wealth destruction that's occurred in the private sector? This is an important point, because this is what the government is saying, isn't it? It's saying it's spending money because the private sector isn't.
Well, David, it's a very, very, very good question, and I hope we all are grappling with it every day. I certainly am. I know that history would indicate that whenever you've had huge amounts of currency created, it's always ultimately led to higher prices and to inflation. I would expect it to be this time, too. You can only have so much money chasing so few goods, and remember, the supply of most hard assets, real assets, commodities, natural resources, is under duress. So with a combination of less supply and huge amounts of money being printed, my view is it's going to lead to inflation down the road. Maybe not this year or even next, but I would be very, very prepared if I were you.
Okay. Well, let's talk a little bit about how you invest in that environment, because we are in a different environment at the moment. Maybe not fundamentally. I mean, you may disagree with that, but certain things have changed. And it's the option for you to talk about your book here, because I'm reading the review on Amazon, which says you use your trademark candor and confidence, but you add paternal compassion, protectiveness, and even love. Is there a place for love in a book on investing?
Well, this is really not a book about investing. I know my publisher wants to sell it that way. You know, I came to fatherhood late. I came to all this whole bit about, I used to feel sorry for people who had children, Paul. I didn't ever want to have children. Well, I was totally wrong, completely wrong. These little girls are so much fun for me. I cannot get enough. In fact, Paul, if there's anybody watching this show who hasn't done it, I urge you to get home and get on with it. You know, you take a day off, take a half a day off. No, don't take any day off. Take it, do it on your lunch hour. These are perilous times. But no, these kids are so great, so I set out to write down a lot of the things that I had learned about life. Now, as we all know, many of the things that apply to the market also apply to life, such as think for yourself, or be independent, or be careful of the boys, some of those things. So many of them do apply to investing, but it started out as a book for my little girls.
And it could be a difficult world that they're growing up into, couldn't it? I mean, what is your advice?
No, it's going to be extremely difficult. You know, the last 60 years, I've been lucky, we've been lucky, because the world has been basically growing, hasn't had many serious wars. I don't think that's going to be the case in their lifetimes. I think you're going to have more hard times, lots of periods of hard times, and you're going to have more wars in their lifetime. So I hope I'm helping them and preparing them for a life which will not be as simple as ours was.
Well, one of those is something you've acted upon yourself, and you've said this, I think, in previous interviews. If you were smart in 1807, you moved to London. If you were smart in 1907, you moved to New York. 2007, you moved to Asia.
Well, here I am. Here you are, Paul. I mean, here we are. Yes, I've decided on Singapore. My little girls speak Mandarin. They're both, I mean, one's 1 year old, but she understands Mandarin. The other one is perfectly fluent in Mandarin. I think that the best skill that I can give little children born in 2003 and 2008 is to be perfectly fluent in Mandarin and in things Asian. I'm acting on it. You can ask me in 80 years whether I did the right thing or not.
That said, though, Asia, and we see this in Thailand over the last 24 hours, still is in some places politically unstable, in other places non-democratic. These things matter, don't they?
No, of course they do. But, Paul, if we were in 1909 and in Europe, you'd be saying exactly the same thing. I mean, there were revolutions and dictatorships, and my goodness, over the next 50 or 60, couple of very serious wars over the next 50 or 60 years. So yeah, this may be happening in Asia right now, but in my view, Asia is going to be the 21st century.
Okay. Now, a lot of our viewers and a lot of people in the world tend to think of a shorter time frame than you often do, and certainly not a generational time frame. I'll throw in a couple of emails here and there, but this is one that we get quite a lot, and a lot of people want to know. What is your best one-year investment idea? This comes from Gog, I believe.
My best, first of all, whatever I say is probably going to be wrong, because while I'm a horrible market timer, I'm the world's single worst short-term trader, and a year is a short-term, in my view. I would suspect it's going to be agricultural commodities. That's if I had to pick one thing. So you probably should short agricultural commodities. But that's what I've been buying. I've been buying all commodities, but especially agriculture.
Anything in particular in agriculture? I mean, you tend to buy the index funds, is that correct?
Right.
You buy agricultural ETFs, etc.?
Yes, I have the Rogers Agricultural Index, which I buy because my lawyer won't let me buy individual commodities anymore because, I'm obviously talking about commodities all the time. So, and he's probably saving me a lot of money. I'm sure I picked the wrong ones if I picked individual commodities.
While we're on the subject of your index fund at the moment, we do have a chart I'd like we can bring up. It should be available right now, comparing your Rogers International Commodity Index with the UBS Bloomberg Commodity Index and the Reuters CRB Index. Over the last 52 weeks, your one has underperformed. Why is that?
Well, I mean, what do you expect Bloomberg to pick up and show over the last 52 weeks?
Well, if
you picked, I understand, but if you picked a longer period of time, you would see that the Rogers Index is beating the socks off the Bloomberg Index. I mean, it's their indexes, Paul. Some index components outperform others. I mean, you can look at the S&P 500 and the Dow Jones. Sometimes one is better, sometimes the other is better. In the end, they basically all do more or less the same thing. Next time I'm on, I'm going to make sure I pick a period when the Rogers Index has outperformed the Bloomberg Index, and then we can discuss it.
Jim, I got to blame it on you. Actually, you told Paul in the last section of the show, take a half day off, take a day off or something like that, and there he went and took a half day off. How you doing, my friend? Good to see you.
I'm fine, Bernie. You certainly don't look like Paul, so I guess it really is Bernie Lowe. I'm delighted to be here with you.
Well, I'm delighted to see you. Age Before Beauty, and all our voices are cracking in this kind of an environment right now. I know you were talking to Paul and taking a few of the first out-of-the-gate emails from some of the viewers there. But basically, where are we with the markets? We've had quite a bit of recapture. We've had some evidence that the markets are coming back, that people are borrowing again, that companies like Wells Fargo are lending again. I guess we're out of the woods, Jim.
Well, that's what they say on Bloomberg, so it must be true. I mean, what other source of information do you need, for goodness sake? Well, we're overdue for a rally. I mean, we're having a rally. When you have that kind of collapse, it doesn't matter. You still have rallies. Even in the 1929 and 30 and, into 32, there were some huge rallies along the way. I don't know if this is going to be as bad as the 30s. It may well be. But a rally is not unusual at a time like this. We've certainly seen a bottom. Is it the bottom? I don't think so, Bernie. I think we're going to see more bottoms in the next few years.
And what's going to lead us there? Do you still buy the? I can't tell who Dr. Doom is nowadays because there's so many of them running around, kind of like Santa Claus at Christmas time. But Rubini was telling me S&P could hit 600, does have the potential to go 500, but the market's taken absolutely the other way. Are we going to stop listening to the collective Doctor's Doom in the world? Apparently not, from what you're telling me.
Well, I would expect to see, you have to ask him, as far as asking him, I don't know, but I would expect to see more problems. Probably this fall or next year we're going to see currency problems, crises in the currency markets. That has not yet happened. We're going to see more bankruptcies as a result. So there are going to be more problems in the financial markets, which does not mean, Bernie, we cannot have big rallies. We're having one. I don't know how much longer it's going to last. I am not participating, at least in the stock part of the rally. I'm participating by buying commodities because if the world economy is going to be better, commodities are going to be the best place to be. If the world economy is not going to be better, commodities are still going to be the best place to be, or at least the least bad place to be.
Everything got taken down at the same time, though, stocks and commodities all in tandem. I mean, one is not an offset for the other. That relationship is being redefined, isn't it?
Well, it didn't get quite taken down together. Stocks peaked in October of '07. Commodities went up until July of '08, so another 10 months or so. But no, you're exactly right, Bernie. Let's not kid ourselves. Commodities have collapsed just like everything else. We have been in a period of forced liquidation where everybody sells everything, no matter what the fundamentals. They have to because they're being forced to liquidate. So, of course, everything went down. Yes, the fundamentals for commodities, by the way, are getting better. This is improving the fundamentals for commodities. It's not improving the fundamentals for General Motors or Citibank, but commodities are the place to be, at least in my view.
Okay, let's start going to our viewers here because they're lining up like jets on a wet tarmac on a Friday evening at JFK. Dan writes in from San Francisco. How long, Jim, do you think that the rally in the U.S. can last? How long can the rally last? You've already indicated that you don't think it's going to last forever, that there will be a wholesale sell-off at some point. But for right now, how long